Hello everybody, good afternoon. So today is 20th of March 2019 and I'm going to take you through good setups for long-term traders. So this is going to be a very brief webinar. We're going to take like around half an hour. We're going to look at the very good setups that any long trader would look for. So we're going to first of all to start by looking at what is long-term trading. What do you mean when I say long-term trading? Just a second. So in the forex market there are like 4 types of trader. We have scalpers, we have intraday traders, and then we have day traders, then there are position traders. If your trades expire in minutes, like if anytime you put a trade, assuming you have a buy here, assuming you have GBP/USD, pound dollar, and then you have a buy, then that buy only goes for maybe 1 minute, 3 minutes, or maybe some seconds before you close it. Then that is what is called scalping. And if your trades go for more than, assuming you have a trade, if you count this chart, then you buy this pair, maybe you sell it, assuming you sell that pair, then that trade runs for at least 1 day or maybe some hours within the day, then that's what is called intraday trading. Then assuming you have trades that run for maybe 2 days, 3 days, like you buy this pair and you expect it to run for the next 3 days, then that's what is called day trading. So day trading could lapse up to weeks. You could have a trade that has opened this week, and the trade may run from this week, next week, maybe like some few weeks, but not months. That is called day trading. Then position trading is where if you buy a pair or you sell a pair, it actually runs for months or even weeks. So these two, we want to focus so much on these two. What are the long-term setups that you're supposed to look for when you're doing day trading and you're doing position trading? So we are not going to look at scalping as such. We are not going to measure on scalping. We are also not going to measure on intraday trading, but we are going to measure on day trading and also position trading. And then we are going to look at very good setups that, assuming somebody buys or sells, then they're guaranteed that this trade is going to run for more than 1 week or maybe 2 weeks. So we'll start off. Let's move to the main pair. So the first thing which I noticed here is that most people, if you from our previous webinar, most people look at chart from 1 hour point of view. Most people want to see what's happening in the 1 hour, 30 minutes, because they need trade every day. But from real life experience, the best you should be doing is don't focus on these minutes. Don't focus on what's happening on 5 minutes, what's happening here, what's happening here, unless you are entering trades. Main analysis has to be done from the highest time frame possible. Like, you want to trade this correctly. Let me log into a different account here. I have a lot of demos on this one. Good. So logged in, show all. We have our chart there. So most people, from my experience, most people, because they need trades every day, they want a case where you'll trade today, you'll trade tomorrow. They want to see that consistency, that every day they're seeing a trade. Every day they're seeing a trade. In the process, they forget that the main lines, the main key levels are actually on the monthly and the weekly levels. If I want to trade 1 hour, 4 hours, or even 30 minutes, then the same level I'm seeing on the monthly must be the same place I'm buying from the 30-minute chart. I don't know whether that makes sense, but it should make some sense that before you look at any chart, before I come to this chart, then I say, assuming I'm looking at 15 minutes chart, then I'm coming here, then I put a line at this resistance, then I now begin to say that this is a resistance, price went down, came back to the same level, that this is a sell. It looks good from the 15 minutes point of view, but if you have to trade long term, then the same red line you're seeing, assuming you move now to 1 monthly chart, then that same line has to be the same line that you're seeing on the monthly chart, that without shifting it. So it has to be that if you have a level here, assuming you have this as a resistance, you're having this line at 1.227 as a key resistance. To trade that level from a 30-minute chart or maybe 1 hour, you need to move there, and then you'll find where that line is on this chart. It is somewhere very, very long, very, very way above. So what this means is where the price is now, which is at around 1.1347, price has to move from that point up to that line for you to start looking for a sell. That is if you're doing a long-term trade. So you need to learn to wait for price to get from this point up to this point. And if you can't wait for it, then look for setups from this point that are actually pushing price back to this level. That means instead of waiting to sell here, you could wait for price to, you could look for setups from where the price is now, setups that are showing you that the price is heading up to that level, and when the price is right there, you're supposed to look for a trade. So the first setup we're going to look at, the one that stands out for me, is called double top. Double top, from the word double, two, binary, two. So what that means is this. I'll use illustrations, delete period separators, and then I'm also going to remove this line chart so that we have a clean chart there, line chart here, so we have a clean chart now. So what double top it means is this, that you have your levels on the screen like that. This just a resistance line. If this is a resistance, then price comes from the lower side. The price gets from this point, heads towards this resistance, but does not do anything. Instead, it bounces from that point and heads down. The next time price gets back to the same point, then that's the correct place to look for a sell. So if this is happening from a higher time frame, like assuming you look at this from the monthly point of view, then notice that during this time when price was here, maybe this was 2015, price got to this line on 2015, then it went down, then it came back to the same level in 2019. Then that is enough for you to suggest that this is a double top, and therefore you're supposed to look for a sell. So there's one thing you need to notice, that before you sell here, while the price is coming up to this level, don't just be selling. Don't wait for price blindly along this level and trigger a sell once the price is there. No. Observe how the price is getting to this level. If price is getting to this level with peanuts, like you see there were big candles, something like this, you'll find that the price is moving towards that level. Like if this is truly a level, price will move up massively, and that should be green. You find a very big green candle emanating from the lower side to the upper side, like that. So this is how you know that the price is likely going to reverse from a level, if that is indeed a triple top. So you'll see while price was here, everything is okay. It bounced off, price went down, you see red candles, and then it bounces now from some level which you've not established from this point. Then it begins to move up. While at that time when the price is going up, observe how the price is heading towards that level. You'll see things like this. It continues up, price goes up just as usual, but not with the same momentum with which it crashed while it was going down. So you notice that it continues up. Just a second. And then the next one also goes up. You find something like this. Maybe this one could send a tail up to that level, but does not close above that trend line. And the next candle again opens, tries the same thing. Instead, the tail goes up but does not do anything. Then the next one also tries the same thing. It opens maybe slightly lower, and then it goes up, and it even has a bigger tail compared to the previous ones. So assuming this was 2015, the price was here in 2015, then it went down, got back to the same level, then while price is getting toward this trend line, this resistance, you notice that it now begins to exhaust itself, tails, and then there's another, even a bigger tail. This is a very, very good sign that price is possibly exhausting, and therefore this could be a triple top. So if you're looking at the monthly, then you should be able to pick a sell from somewhere around this point while the price was using this place. The entire zone is the correct place you're supposed to sell from. So if you're that guy who is selling blindly, like anytime the price reaches a resistance you look for a sell, then probably you are stopped by this. Then if this did not stop you, maybe your stop loss somewhere above here, then the one with the longest tail actually stopped you. So how about you just waited for price to get back to this level, somewhere above this zone where I've colored, so that you pick a sell from that point. Then the day that price closes below here, then that's a confirmation that this is now a sell. So some people will now wait for the next candle to be red. They'll not do anything despite the tail they are seeing that the price is showing signs of exhaustion. They'll not do anything until this red emerges on the screen. This is one very good setup that if you can find it on any chart, then it's the best one you're supposed to look for a trade from. Get a clear resistance that was holding for a long time. Like the price was there 10 years ago and the price has just come back to the same place. Then that should be the correct place to look for a trade from. Don't enter anything while the price is approaching this level. Wait for price to get back. While the price is coming back, you will see that there's a big candle, there's another big candle, there's another big candle, there's another big candle. Then we have an inside bar that has a tail above every other tail you can see, but has closed below the same line. This in itself is a sign that we are possibly heading downwards. The candle you're seeing here, this one, is a sign that we are heading to the lower side. So you should be preparing for a sell. And if you can't sell immediately, maybe you're scared to sell, then wait for this red candle. Then should the next candle, which should be here now, maybe at this time is going to be green. Should this candle attempt coming back to the same point, then this is the correct place to sell from. Just a second. This is going to be the correct place to sell from. So you will see that the price was here, price was coming, approaching, your level is approaching, then it tries to go up, and then this candle pushes the price down. Should price get back again to the same place, then that is the correct time to look for a sell. So you'll be able to sell there, have your stop loss somewhere above that tail, and then your take profit should be at the next closest level. And if this is a monthly, then this should be very many pips to reach. Like you should be able to pick a sell there, let it run up to that bottom. So we are going to look at a live chart. There's a very good setup about the same, and that chart should be, this is USD SEC there, monthly chart. From this point, there's a very good resistance we are seeing there, and then there's also this one. There's a level. This is just a very good support that I think price is likely going to use in the future. Support, a support, a support, and then we also have a resistance at this point. So what this means is this, that the price was at some point here, it went up to that resistance. Yeah. Black. It went up to this resistance, then it came from that resistance to the lower side, got supported, and then it has come back just this year up to the same resistance. So this was at top. This is now at the second top. The correct place to look for a sell is while the price is above the line you've drawn, the red line. So whoever was seeing this as a sell maybe earlier this month and then it took a sell immediately, they were probably stopped by this candle. They were stopped by the candle. The one that sent a tail above this high actually stopped them. To avoid such things, wait for prices along the tails. Wait for price to reach these tails, or that after you've known that this is a clear resistance level from the monthly point of view, then wait for price to get back up to that resistance. Then while the price is above that line, the one you have on your chart, then that should be the correct place to trade from. Don't trade anything unless the price is above that level. It may look like somebody may want to say that while the price here is a breakout, but from my own experience, if you have a monthly level and price has not been able to close above it for the past like 1 year, there are less chance that the price is going to close above it even now. But if it does close above it, then that's a breakout. So in this case, you have a level here. There's a very good resistance. A very good price goes down. This was when this was 2016. Then price goes down, then comes back to the same place, and now we are struggling to hold price below that level. So we don't expect the current month's candle to close above this line, 9.2359. But if it is true that at the end of this month the price is has closed above 9.2359, then that will confirm that we are upwards. But as it is at the moment, we actually expect price to push down to the lower side. We want it to get from this point up to this trend line, because this is what has been holding. Other than this resistance, we also have a trend line, a supportive trend line which has been holding. That was a support. There was another support there, and we want the same place to be a support in the future. Should price get back to this level, then this is going to be a very good support and a very good place to buy from. So another thing, this setup, the one I'm looking at, is really good for long-term trading. Double tops. Anytime you identify a chart and then from the monthly point of view you can see that this is a top, then price is approaching the same top for the second time, then that's the correct time. So a double top has to be like this, that previously, notice from this point here, the one where I'm having my mouse pointer at, previously there is no time that price actually hit that level. There is no time. You cannot find, all these candle bodies are actually below. They are not reaching this level. So for this to be a top, it has to stand out that previously there were no other candle bodies touching it. It's only the first time, then there's a clear rejection, and then prices come back to the same point. Then now we're looking for a sell when the price is there for the second time. So you successfully sell it here. You're supposed to let the trade run up to this trend line. From this chart, actually, you should let the trade, you pick a sell, let it go up to this level. And another thing, assuming now price descends below this level, that you wake up and find that the price is below this level, this trend line, then that is a clear sign that we are heading even lower. So what we should do, just wait for price to get back up to that trend line, wait for price to get back up, then pick a sell precisely from that point to the lower side, something like that. So we took a sell here, we took a sell while the price was somewhere around that point, and we're also going to wait and sell while the price is around that point. Somebody may want to say that, how long should I wait for price to get back, assuming you find that this trend has already gone and the price is somewhere in between? How long should I wait for price to again break below here in the future so that it continues to the lower side? The answer is simple. There is no defined duration when you're supposed to wait. But in case the price does, as we say, that has continued down and has retraced back to the same place, and then you are able to get it here, then that will be the correct place to sell from. So if you can't find a good trade on this set, assuming you log into your MT4 and then you find that the price is in between, but you're waiting for price to either sell here or sell here, but the price has already sold off and we are here, then just let the chart be. Don't force any trade. If you can't find a trade on any chart, just leave it. There is no harm. After all, there are a lot of trades here. There are a lot of charts here where you can still look for the same trade. All these are possible symbols that you can trade. All these, they are possible symbols. All this, you could trade any of them. So while you're waiting for a sell here and it has gone without you trading, you can as well move to the next chart. Move to the next chart and try finding tops like this. Try finding levels like this. Then expect price to get back up to such a level before you look for a sell. So like in this case, if this is to be a triple top, there has to be a clear trend prior to the first touch. Then if price goes down and gets back to the same level, then that should be the second touch, and that will now give us the double top. This one. This is a very, very good setup that anyone who can trade it, assuming you're able to trade this, you're able to identify tops on a chart, then that's going to be the best one for long-term trading. And even better, just look at what was happening while price was touching this line for the first time. If there was a clear active trend prior to the first touch, then that's a very clear sign. Then the next time when price goes down, it does not outdo this trend. Like it just goes down, but it does not go below where this trend started before it eventually heads back up. This is what you need. And even better, if this one actually did not go lower, it maybe reach somewhere like this, that it goes up, then it starts to go down, then comes back to the same point but does not close above, then you begin to see exhaustions. That's always the correct time to trade triple top. So somebody may insist that triple top are good from 1 minute chart. It's okay, they're good, but for long-term trading, the best place to look for them is monthly or even weekly. So like on the weekly chart, you can see that this one now ceases to make sense. When you're looking at the monthly chart, it was okay. From the weekly, it does not make as much sense as the same way it makes while you're looking at it from the monthly point of view. So this is another level here. This is a resistance, which should price get to it, we are also going to look for a very good trade. Then another thing which I'll mention is that if you can't find a clear levels that stand out on a chart from the monthly point of view, then don't trade it. See, it is better not to trade at all and see your money than know what you're supposed to trade but while you've lost your money. So if I have a level here that these are good resistance, I'm also having a level here as a good resistance, then I'm also having a good level here as a support. Then I'm also having another level here, maybe as a support there. Then I'm also having another level here as a good support. Then this is another level here as a good support. What you should do is simple. Wait for price to reach any of those lines. Don't do anything while the price is in between. Like in this case, the price may be here and you begin to get frustrated that the entire month has gone and you're not traded anything. That's not the problem. The problem is if you enter trade while that trade was not a good one. That you not traded the entire month is not the issue. The issue is you've entered a wrong trade while you had the chance to enter a good one. So it is better you find your levels like this. These are the levels I'm having on this chart. Don't do anything unless the price is on either any of those lines. So that's one thing. That's one thing. Don't trade anything unless the price is on any of those lines. So if the price is here, I'll be interested in a trade even if that trade is from the monthly point of view, from the daily, from the weekly, or whichever time frame. And if the price is here, I'll be interested in a trade. But while the price is in between, I'm not doing anything. So this applies only to those who are trading higher time frame, like long-term traders. You identify a key level and remain within those key levels. That's the secret. You don't want to trade anything that shows up on the screen that the price is here, in between I have to trade today, I have to make money today. Long-term traders don't reason like that. The best way is to wait for price to reach a clear defined level and trade only when the price is there. So you may have, if you are trading like that, you may have maybe 1 trade in a week, 2 trades in a month, but then they are good ones. They are genuine good ones. So another thing, trading like that requires capital. It needs capital. You're not just going to make money just by long-term trading. If you're waiting for price to reach here for you to have that one trade, but the volume you're doing 0.01, then that may not do you any good. It may not do you any good, honestly. It may not. If you're waiting for price to reach here for you to do 0.01, then that may not do you any good. That means that for long-term trading, you need capital. You'll need a lot. You'll need good capital. Not entirely a lot, but you need a good capital for you to make money. So I'll sit down here, wait for 3 months for price to just to hit this level. Then I'll enter one trade, and then that one trade I'll have the volume of 10. So when immediately price gets from this point to my take profit, or maybe breaks above and I manage to pick above from that point up to this level, if the volume is 10, then I'll be able to make way much more than if I was doing just 0.01. So that means that the amount of volume anyone you trade is also significant. You're not just trading because the price is there, or I'm a long-term trader, so you come here and then you do a volume of 0.01, and then you still expect to make the same money, make something out of Forex. No. What you need to do is simple. Ensure you have good capital. You want to trade long term, have very good capital. Then when the price gets your key levels, that's like in this case, this is my key level, this is another key level. Work with volume correctly. Ensure you are putting very good volume, so that in event that the price goes your way, then that will be enough to push the entire year. So if I enter sell here, if I sell from this point to that point, the move from this point to this point with a volume of 10 is significant, and it's enough to change a lot. So you'll find that by moving from this point to this point, you have like 10,000 USD. That's not the exact amount, but you have something like that, which is very significant. But if you're doing 0.01 here and you are capturing the same move from this point to this point, you may be earning like 100 USD, which is insignificant. And maybe the time from this point to this point is actually 10 months. So that means that you are working for like $10 per month, which is insignificant. So I hope that should make some little sense. That you want to trade correctly, measure on key levels. So far, we've only looked at double top. There's also another one, which is triple top. That means price touches a level 3 times. And we want to look at that just now. To delete that, also delete that chart. Line chart. Deleted. So, assuming you have a level, here, then price leaves that level, gets back to it for the first time, and then it is rejected. Then price gets back the second time, but is rejected. Then price gets back to the same place, then it is rejected. You see signs while the price is around that point that there's a rejection. That is always the correct time to trade. So you're looking at the month. If this is a monthly chart, they notice that in the year 2005, the price was along this resistance, but it could not close above it. Instead, it went down. Then it came back to the same point in 2016, maybe. Then it went down. Then it came back to the same place 2019, but could not do anything. Instead, you are seeing signs of exhaustion. Then that is the correct time to look for a sell as a long-term trader. And that sell, normally, it goes up to the neck, up to this, somewhere around this point. So you'll find that there's one thing I mentioned when I was talking about double top. I mentioned that when the price is here, don't do anything, but monitor closely how the price is getting back to this level. observe closely. So you'll find that at this point, when the price is here, it begins to move back up with some steam. It pulls back up, like it accelerates up immediately after reaching some level on the lower end. You'll find something like this, that after going down, it pulls back up immediately, and then the next candle, the one you're seeing, also pushes the price even higher, something like this. Then the next one also pushes the price even higher, something like this. But then you notice that the momentum is somehow decreasing. The price is, the candle is bigger, it becomes even smaller, and the next one goes up again, and this one is even smaller but has a long tail on top. Then the next candle you are seeing is this. It's now a different color, it's even red, sign that sellers are now in control. And then it also has some tail, but not as big as the previous one. So monitor closely. Anytime you have a level like this, then you notice that when the price is approaching it, it does not approach it with the same momentum it used previously, just recently in the past. Like this is like a monthly chart. This is what is happening currently on the monthly chart. Previous month, that other month, and then this is last year. So you notice that when the price is approaching this line, it was big candle, bigger candle, bigger candle, then it begins to exhaust itself. There's a tail, even a larger tail, and for the first time we are seeing a candle with a different color. So this is a sign that you're supposed to sell. And before you sell it, if you're more scared or you're skeptic to sell it now, wait for price to get back up. Wait for the next candle to actually send a tail back up to this level, then pick a sell while the price is around this point. So this should make some sense, that such a formation should only be valid when it's appearing around a key level. So you're not going to sell anything just because this is a key monthly level. No. You need to observe closely how the price is getting towards your level. If assuming this candle was like that, is one big candle, I would be scared to sell the next one. But if it begins to exhaust itself, that anytime it sends a tail, there's an exhaustion, it sends a tail, there's an exhaustion, it sends a tail, then if it even ends up red, then that's a sign that possibly this is a good place to sell from. Observe closely. Don't forget this. As much as you're doing a long-term trade, or you should be able to observe closely how price is getting towards a level. If it gets towards a level and then it begins to get exhausted, then that's a clear sign that you're supposed to look for a sell. So another thing, while the price is here and you're waiting to sell here, ensure that that sell is going to have a good volume. Ensure that the capital you're having in your account can accommodate a very good sell, like a very good volume, so that instead of waiting to sell 0.01 here, somebody is waiting for 3 months just to sell 0.01 at this point. This does not make any sense. So price will leave from that point there, it will leave there, then go back up to this level, which is okay. He'll be able to make some money, like 153 pips. If you calculate that, that could be around 153 USD. And the same distance, the same move from this point up to this point, somebody doing 10 will make 10 times. So this is not even 10, this is like 100 times what somebody who was doing 0.01 was making from this point up to this point. So volume is significant, and that means the guy who sold here, if this is a monthly chart, actually made something close to 153,000 USD or 15,000 USD, sorry. So volume is everything. Volume is everything. As much as you're trading monthly chart, volume is everything. Long-term trading requires good volume. If you sell here but the volume is 0.01, it is insignificant. But if you sell the same place but the volume is 90, 100, then that is any slight move towards your way is significant. Another thing on the flip side, any slight move against you is also significant, will significantly affect your account. So wait for levels like this on the monthly chart and trade them. So another thing, observe how price is approaching a level. If it's approaching lazily, like you see, it attempts to get up but gets down, attempts to get up but gets down, attempts to get up and instead even closes below, then that could be a sign that you're supposed to sell. So I have an example on Euro USD JPY here. Just a second here. Weekly. Just look at this level and then tell me what you think. There's a resistance, and this could be like a triple. While the price was here, this could be like a triple, although it's not a clear one. A top, a resistance, and this just a resistance. Sorry, this does not even qualify to be a triple top. It's just a very good resistance that has been holding consistently. So when this is a resistance, look at how price is approaching that resistance. If when the price is approaching it, notice that it's approaching it lazily, like the price begins to get exhausted when it's approaching that level, then that's a sign that this is a potential sell place, and therefore you're supposed to look for a sell. So focus on key levels like this, things that stand out, levels like that. Only levels that price reached and there was a clear reversal. It actually reversed immediately. It spiked the opposite direction. Those are the places to look for, especially from the highest time frame you can see. Look at this chart from the day. There's something which was significant some few months ago. This was 2017, I believe, 2017. So the price gets here, then it's rejected. It gets back to the same place and it's rejected. Then it gets back to the same place and then it begins to get exhausted. There are pin bars and then there's this exhaustion. Then price attempts with this green candle, it actually attempted to get back to this level before it went down. So this is the correct place to sell from. Anytime you have a key level that has been holding for a long time, then price gets there and you begin to see exhaustion or signs of exhaustion, then those are always the correct time to look for a trade. Don't trade anything unless the price there. So somebody will say that, oh, this is a buy, that this is a resistance, and there's a break above, it's a retrace, I'm supposed to buy. Yes, it looks ideal, it looks good for buying, but what you need to have in mind is that you are headed towards a sell place. Instead of buying here, wait and sell there. So don't find yourself buying anything here. If the price is showing you a buy at this point, wait for that. Wait, don't do anything. Instead, wait and sell when the price is at 114.28. So thank you very much. We've looked at just two patterns that are ideal for long-term trade, that is triple top and double tops, and I've tried to explain why you need big volume. If you want to trade long-term, you need big volume. And I've also explained how when price approaches a level, you begin to know that the price is likely going to reverse back to the lower side. So thank you very much. That should bring us to the end of today's webinar. See you again tomorrow at 8:30 GMT. Thank you.